Hi. Thanks for having me on stage. I'm so excited to be here. It really feels like we are doing something incredible and taking back the power away from the banksters. And I really like that because that's the way of freedom and so on. So thanks for having me here. I took the red pill in 2016. I was on my own. I had no friends involved in Bitcoin, so they will think it's still a scam. But maybe I can prove them wrong. I don't know. There's a lot of people that might experience some difficulties approaching the markets, and I will give you some insights that can be profitable for you in Bitcoin terms on the long run. So, where's the remote? Oh, yeah. Thanks. So, how does it work? Okay. 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 So, basically, it's all about buying low, selling high, right? But people, we don't get it in general. We are not rational creatures. And there's a lot of controversy on Twitter, like Tony Vase is bearish, Pomp is bullish, and then what should I be? Should I be bullish? Should I be bearish? So, to me, technical analysis is completely overrated because it's the banksters' approach, actually. So, you guys think that somehow by longing Bitcoin at the right time, it will be good for your finances, but it's not. It's not. So my approach is to be more like water, or I don't know if you know Aikido. You use the strength and the force of the opponent, and you apply it back to him. So this strategy is a bit like that. So the white part is the real money, right? The Bitcoin, and the black part is the fake money. So you see there is a white dot on the fake money and a black dot on the real money. So this is all it's about. So basically, my strategy is you allocate 50% of your portfolio, of your net worth, in Bitcoin, like real money, and 50% in fake money, the US dollar. And what happens is that every week you will reallocate 50% in fake money and 50% in real money. You don't have to think about it. You just execute the trade, and that's it. You don't have to time the market, you don't have to do technical analysis, and you will get some results. Nice. So yeah, we all know that there's going to be a lot of volatility until Bitcoin becomes de facto the world reserve currency because of the proof of work mechanism. Therefore, we can expect the bankers to play with our feelings and try to crash the price and then manipulate the perception of the public to increase the price and then crash it again and so on and so on. So, yeah. So, as I said previously, you don't have to think about it. You don't need to be consistent, except that you need to do it at the same time of the day every week. And it's really important for many reasons, but basically you won't be chasing candles. And I think it's important for mental health to not look at the charts. So this is like a simulation I tried, entering in position in May, the 1st of May, and every arrow is, what's the last one? Yeah, every arrow is like, this is a sell order, this is a sell order, this is a buy order, this is a sell order. So it's not orders like I buy it on spot at the same time of the day. I don't care whether I just do it same time of the day, so I don't, you know. Does that make sense so far? Okay. So with this technique at the end, then you would have bought your Bitcoin at a price of $5,500. So it's so it's here. Sorry, 5,300. And sorry, I have some problems with that. Oh, okay. Okay, I get it. Okay. Okay. Sorry. Oh. Well, so I am in position at this point in time, the 1st of May, at the price of Bitcoin at $5,350. Later on, next week, then I just reallocate. So you see there's the same value in crypto and the same value in DAI. I prefer using DAI because it's decentralized, so you don't need to trust the third party to still give you back your money in the end, like exchanges, for example. So, yeah. So at the end of the experiment, you get to the 4th of October. This is when I stopped running the numbers. And you see that you have 146,000 US dollar value-wise. And you didn't buy all in Bitcoin. You did diversification. You hedged with the fake money against the bankers. And that's important to have always a bucket of 50% of your wealth of fake money to get the real Bitcoin in the end, because you will buy the dip. So see, on the 10th of October, I decided that the price of Bitcoin should be $3,500, because I'm bearish, I'm turn-based, you know. Still, I'm profitable dollar-wise, even if I entered at a really, really higher price in the beginning. So it works like a charm. But you have to be consistent, that you do it on a regular basis, every week. And I think as a community, if we all do that, or maybe we can write a contract that does that, but if we all do it as a community, it has a huge impact on the macro scale. Because now we just make money out of volatility, and therefore it lowers the volatility, and it makes the whole system much more stable in terms of price-wise. So it's really interesting. So yeah, thanks for your time. I hope it was interesting. So, do you got any questions?
Well, thanks for the talk. My question is, you have this initial amount of capital, it's like that is fixed, right? And then the profit that you make, it's going to other bag, and then you still maintain that 50 and 50?
Yeah, as you maintain the equilibrium, you will be actually buying the bottom and selling the top always. But you don't need to watch the chart, and you don't need to watch the price every day. You just do it on the one day, 50-50, and that's it. That does answer your question?
Yeah, I think so. I was not sure if it was dynamic.
Yeah.
Dynamic capital.
I can go back to the
amount
slide of the price to see how big are the orders. Yeah. So yeah, here I buy 9 Bitcoin because it's at this price it's half of the invested money.
So sorry, let's say that it's during the Friday. Then if that Friday you have a better position for buying, you buy.
Yeah, but in the end, it doesn't matter.
Yeah.
On the long run, it doesn't matter if you choose Monday, Tuesday, Wednesday, Saturday. It doesn't matter because if everyone has a different day, then it's
Yeah,
okay.
yeah.
It's okay.
So are those arrows when you buy and when you sell, basically?
Yeah.
Okay.
Yeah.
Thank you.
Hi, so obviously most of us put our Bitcoin in hard wallets. So what percentage do you need to have liquid in order to keep doing this strategy? Because you don't have all your Bitcoins liquid.
So yeah, basically, you can have just a bucket, a small bucket of your money in this strategy. Maybe 1% of your assets in this strategy. But you still to keep in that bucket 50% of fake money. This is how we fight the banks, actually. This is the, yeah.
That's not what I meant. What I meant is
sorry.
every week you're going to need to trade some Bitcoin
Yeah,
or
of course.
some dollar. Like, what's the biggest percentage of my Bitcoin that I might need to have ready to trade to dollars from week to week? Like, because I don't want to have all my Bitcoin in an exchange.
Oh,
Yeah.
yeah, of course. Actually, you only need the amount you need to sell, right?
Yeah.
So basically,
How
you.
much has that been for you?
Well, for example, on the first week, I have to sell 0.43 Bitcoin. Yeah, that's no. Sorry if that doesn't answer your question. Yeah. Oh, okay. Well, there's different ways. I think the previous speaker explained way better than me. But basically, you can use are you familiar with Uniswap? And you can have the DAI on this, and therefore you can have cash on hand to buy Bitcoin for DAI. And using the DAI, it's basically it's fake money, but it's good. It's as good as the dollar, I mean. Okay, thank you.
Thank you so much.